Hello, everyone. As promised, I wanted to do a quick video about the MACD strategy that I've been speaking about recently in my videos. Now, the advantages of this strategy are that it's very simple, it's very straightforward, and it has an extremely high win rate. It has one of the highest win rates of any strategy, 65 to 70%, so long as you set a reasonable take profit. Now, the downside is that you don't get a lot of signals, very infrequent signals. But there's still a silver lining to this con in that it stops you from overtrading because the signals come so rarely. Now, this, like many strategies, has two different flavors. If you're buying to go long or selling to short. So let's take a look at those right here. So over at the long, looking down at the MACD, you're going to wait for your typical MACD signal line cross signal. But you'll only want to enter the trade if it's below, if this cross is happening below the MACD 0 line right here. And if the price is above the 200 EMA, the 200 period exponential moving average. That's what this teal blue line is. So if these two things are happening at the same time, if the cross is happening below in the MACD below the 0 line and the price is above the 200 EMA, you're going to want to enter the trade. Conversely, in the short flavor of this strategy, you'll want to do the kind of the exact opposite, where you'll enter the trade when the signal line makes a cross above the MACD 0 line, and the price is below the 200 period EMA. So again, for a long position, you wait till the cross under the MACD 0 and the price is above 200 EMA. Short, when the signal line crosses above the 0 line of the MACD and the price is under the 200 EMA. So basically the reason for this is you'll see the 200 EMA in just about every strategy I do because it's just an overall good idea. It's a good indicator of how the market is trending. Hopefully it's a strong market, but you use the 200 EMA. So if the price is over the 200 EMA, bull. Under the 200 EMA, bearish. And in any strategy, you'll only want to enter a long position when the trend is bullish. All right, so you're entering a trade that goes along with the trend. So you only want to enter a long position when a price is over 200 EMA, and you only want to get into a short position when the price is under the 200 EMA. So that's true for pretty much any strategy you use. And of course, in the case of the MACD strategy, you'll only take the MACD entry signal when it's below the 0 line. So even if the price, for example, if the price in the long position is above the 200 EMA and you get this buy cross, but it's above the above the 0 line, don't take it. Only when it's below. And again, with the short position, only when it's above. These crosses can happen in the opposite place of the 0 line. So buy signals can happen above the 0 and short signals can happen below the 0 line of the MACD, but those are not good to get into because it's not a significant enough change in momentum. You'll want to see this exact setup. This is that exact setup that also matches the 200 EMA. So hopefully that makes sense. If it doesn't, let me know in the comments below. It's a very straightforward strategy. Again, very high win rate, but you don't see this exact setup a lot. Typically what you'll see is you might see this cross below the 0 line, but the price is, the overall trend is going down. It's below the 200 EMA. Or the price might be above the 200 EMA, but this cross is happening above the 0 line in the case of the long position. So look for this exact situation. If you have any questions, let me know in the comments below. I found this to be very, very helpful. I've also found it more successful in the higher time frames. So 15, even 30 minute. Supposedly it works. I've seen some people talk about this and supposedly it works for lower time frames. Maybe 10, maybe 5. I really would not use it for anything lower than that because, man, the lower the time frame you go, the messier that MACD is MACD signals can get really, really messy on lower time frames. But if you go to higher time frames, it's like smooth. It's really obvious signal, and that's what I suggest. So as high a time frame as you're willing to stand. But yeah, so that's all I have to say about this. If you have any questions, let me know in the comments below. Thank you so much for watching. As a side note for the people who are watching, thank you for letting me know that the previous video I recorded for this didn't have any sound. I have no idea what happened. It must have disappeared. So I'm re-recording it and re-uploading it just to make sure everything is all set. So in any case, thanks so much for watching. And as always, good luck out there in the market.